Hey guys, it is Mark Coe for the 12th of November. Just wanted to take a look around markets on a Monday. Happy Veterans Day to all of the veterans out there. Although it was yesterday, we celebrated, I guess, today from a bank holiday type of standpoint. Anyway, the big focus today is going to be equities. You see the Dow down. Right now it's down about 600 points into the close. S&Ps are down about 51 points. And again, let's look at levels, outside edges. So think about the sell-off we've had in the S&P. So it started up from the highs, and this is the lows, down into the 26, 30, 40 area. Those are the lows that it contained it on a closing basis. Clearly, we traded down to an 03 on the lows on the 29th, but essentially the closes are going to occur closer to that 35 to 40 area. Um, Again, that's your bottom edge. You saw some intermediate kind of stuff here around the half, but it wasn't massive. Um, we looked at a level in the 30s today. There just wasn't a whole lot in the middle here. What's going to be a little more stuff to be able to contain you on the support side is going to be a test down to this 2700 level. Because what I always look at is markets either marking price higher, marking price lower, or consolidating. And there was no consolidation in this area. This was just simply marking the price from 27 up to 28.18. That's what it was. So on the way back down, there's no consolidation again. It's just simply marking price lower. There have been some stall points, but there's not a lot of consolidation. And we realize that when we go through our prep work, what you're either faced with in terms of support or lack thereof. And so when you're looking at the E-minis, you realize you can start to look at the half, but there's not a whole lot containing it, so you better find something in the short term or stay out of the way. Again, what I really like to focus on is this idea that right at the top edge, price held at the exact same spot. We then go sell bias on November the 8th, and you're talking close to 90 points at this stage of the game, all from a 2-day sell bias. So again, guys, you have to be looking at this stuff. It's just paying so well. Really have to get involved. I did a class today, really going over kind of the beginnings of it and making certain that everybody understands what's really there. But this volatility is good, and I would expect it to continue. It's not all straight line, and it's not all straight up. I think the market's past that phase. I think that was a crazy run we saw for almost 10 years, and now you're seeing a different market. So you have to make those adjustments accordingly and understand what's there. And looking across currencies, you're seeing a stronger dollar. It's weaker gold. Euro finally broke a big 1300 area. Tapbacks are now well contained up into that 1280. So carrying forward into the week, I kind of thought today would have been a lot slower. It wasn't. It's pretty exciting stuff, and it's exciting to the downside. Oil lower. Nat gas is one of the stars because it's jumped out, gapped higher, and continues higher. Nat gas has continued to be a really strong move to the top side. But keep it on the levels. And like I said, the big level on the bottom side is going to come in closer to the lower 2600. The next decent support in the E-minis is going to come into this 2700. So two big areas to spot on the way up, and we'll see what price is able to do once it gets there. But again, on the top side, resistance, the E-minis capped beautifully up here. And the way I had this area defined was from, again, the highs, 28 and a quarter, all the way down to the closes, which takes you to that 28.18. So we had it just nailed. It was really a thing of beauty. So far, that's about a $4,500 per contract rotation off the top. All right, guys, cheers, and we'll look forward to some more action during the week.